The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 1st. How about that, folks? We're already in August. August 1st, fantastic and fabulous Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Thursday. I know I did. And let's make sure that you and I, that we do all that we can do, not only just to have a fantastic Friday, but let's make sure that we have a fabulous weekend out here, and welcome all our new listeners, all the folks that are watching us on TigerTV using version 12 of eSignal. You know, folks, if you've ever wanted to test drive eSignal, if you go ahead and sign up, you give them a call, and do this by giving a call, tell them that we told you here at TFNN to send you over. They won't just give you a 30-day free trial. They'll go ahead and they'll give you a 60-day free trial. So go ahead and check it out. Great application. Of course, we've got the Tiger TV is built right into it. Now, that means we've got also 8 hours of live programming each day. 8 hours. 8 hours of live program. 8 hours. 10 hours of live program. What am I talking about? Our show here, what we call Hotel California, that's at TFNN, gets kicked off at 8 o'clock each morning. Our man John Logan, he kicks us off. He takes a look at the TAS professional market profiles that he has developed out there. So it's a great tool to be able to identify areas of support and resistance, help you to understand the congestion of the markets, congestion of the roadways inside the charts as you trade them. We've got an interactive forum here. That means that you're welcome to call in anytime, 877-927-6648. That's our call number. We'll help you evaluate a stock, do the best we can, answer any question that you might have about technical trading. Now, my outcome here, during the next hour, on Fridays I do 1 hour, and that's to teach you about the A to B equals CD patterns that are in the marketplace. Those are the lightning bolt patterns. They help us to identify price projections. We also take a look at Fibonacci analysis. We look at expansions and retracements. We look at swing points because they, too, can offer different levels of where price is likely to gravitate to. And we'll also take a look at Japanese candlesticks because the bulls and the bears, they've got to show up for work each and every day. And what they do is they paint signs and they leave us messages as to what the markets are going to try to do out there. Now, speaking of Asian stuff, it was Sake Thursday. Might be Sake Friday as well. And there's a great Chinese proverb. It goes like this. It says, those who play the game don't see as clearly as those who watch. Now, in trading and investing, it means, to me, step back and take a look at both sides of the trade. So today, let's go hunting for bulls and bears. It is Fantastic Friday. I'm Steve Rhodes. This is TFNN. Welcome to the show. Right now, we've got Dow futures trading off about 15 points. They're trading on at 16,479. S&P futures down 1 point, trade at 1924. NASDAQ futures, they're flat right now, trading at 3884. Russell 2000. Probably flat. I got a 10-minute delay on that, so we won't even talk about that. We've got gold is up $11. That's trading at $12.94. Silver's up 10 pennies. She's trading out at $20.52. A quick peek across the globe out here. Let's go see what's going on over in Germany. Of course, our futures well off their session lows. We'll go take a look and see what does that mean. Over in Germany right now, their futures are also off of their session lows. The DAX is off 149 points. We'll go take a look and see what that means on that chart. If you remind me, all you got to do is just kind of click on your screen out there, and I'll hear you knocking. And then you've got the FTSE. That's off 55 points. In Asia last night, of course, we handed the ball off pretty poorly. A lot of carnage, a lot of damage done in yesterday's charts out there. You know, the cool thing about technical analysis is that you can have your opinion about what the charts might mean, but as long as you are willing to go ahead and take the new information that gets provided to you and then step back, look at the charts and see what they say, it gives you a whole new day. And considering that each of us are equal when it comes to time, right? We each have, 86,400 seconds each day or 84,600, something like that, somewhere in that range. We're all equal. But that means we're all equal. That means we are all equal to come back and take a look at a chart, take a look at what it did during its 24-hour time period and reassess what might be going on out there. And that's what that ancient Chinese proverb is all about. So let's begin that process out here. Also, moving in the pre-markets, just to give you an idea, you've got Bally Technology. Looks like a buyout there. They closed at $60. About must be around the $78 area, so that's nice. But you do have LinkedIn moving to the upside. That closed at 180. Right now, trading out at 196. So we'll take a look at LinkedIn. Tesla moving to the upside. Armstrong World, they closed at $48. They're trading out at $51, but they're trading into a level of resistance and supply. To the downside, Web.com, my goodness, WWW, they closed at $26. They're trading out at $19. So we'll take a look at their stock chart. But right now, what you want to know is, hey, what are the markets doing? So we got to go really to. In my opinion, we'll spend the next maybe 6 minutes or so taking a look at the NASDAQ. To me, it's really all about the NASDAQ. Now, why do I say that? It's always good to step back and start from a longer-term time period first. So let's go do that, because the monthly chart is going to give you a trend, the weekly chart. So the monthly trend more important than the weekly more important than the daily more important than the 120. But don't forget, the 120-minute chart is going to change its trend first out there. And so you've got to really kind of keep some balance here and take a look at what the message is. Now, we take a look at how the month ended yesterday, how the month of July ended. You had the composite, NASDAQ composite. That's a monthly chart that we're looking at on my screen out here. It closed out the session at 43.6977. Now, why is that important? Well, because the swing point low for the NASDAQ composite is 43.5569. No bearish reversal, candle, or signal at all inside of the composite as we ended the month out there. That's what the monthly chart is showing us. And from a monthly standpoint, second month in a row of closing inside that swing point. This is really important. Now, the market inside the NASDAQ, it's absolutely in an overbought condition, so it needs to work its way off. But getting back below, closing below the 43.5569 will suggest to us that the move topside would be over. If price is able to stay inside that, it's a monthly chart that we're looking at, then that would say, okay, you can go run up and you can test the highs. Now, what's also important about this stock chart is that the level of this measured move. A measured move is nothing more than taking a look at a consolidation pattern and then adding to either the top or the bottom, once one of those levels is broken, the entire consolidation level. Well, in this case here, it was a 1,500-point level inside of the composite that finally was broken with conviction. That finally took place in November of 2012. In November of 2012, it gave you a price projection of 4,400. Well, guess what we actually hit in the month of July? 44.85. So the price projection inside the NASDAQ with regard to its consolidation has been completed. And so that says we really want to pay attention to what's going on inside of the NASDAQ to really get an idea of what is happening inside of the marketplace. If we go take a look at the weekly chart out here, and so let me go ahead. We're going to use a couple of different tools. Let's put up the Rhodes Momentum Indicator Signal. Let me pull this over. This happens to be the Russell, but we're not going to focus on the Russell. We're not going to focus on the monthly chart right now anyways. We're going to go take a look at the composite and get a feel for what it is showing out here. So you'll see this little red line going across my screen out here. That happens to be the line of demarcation on the monthly chart, just carried forward here inside of the weekly chart. Now, what the weekly chart doesn't have, it does not have in place a price relative strength divergent pattern. I like to call price RMI top out here. You did have a nice bearish engulfing candle that took place here. Well, it's taken place thus far, right? We've still got today's trading session. I don't know how the week is going to end out here, and really nor does anybody else out there. We'll know at the end of the today's trading session. But there's no actual topping pattern inside of the NASDAQ as we speak here. And the reason that we're taking a look at this is because of the strength here, because this is absolutely, I guarantee you, of course I can't guarantee anything, but I guarantee you that to decipher the markets out here, it's going to be the battle between the bulls and the bears. If we use that ancient Chinese proverb, we got to go look for the bulls and the bears. I'm showing you where the bulls are hanging out, and all the bulls are hanging out inside of the composite. And if that lets loose, Well, I can tell you that the bearish case, which has been made inside of the New York Stock Exchange right now, it's been made inside of the Dow. Well, the composite here, it'll just simply take everything lower, and therefore we really need to be focused on what is going on here. So the monthly chart, still in bullish configuration. The weekly chart says, hey, I'm going to assume that we're going to close below last week's. Let me see what last week's close was out there. Actually, what last week's open was. Last week's open inside of the composite was 44.21. You trade below, you close below 44.21. You've got another reversal signal, another hurdle that is out there inside of its market. But on a weekly chart, hey, not too bad. Now let's take a look at the daily chart for the composite out here and see what's going on, because we really need to understand this, folks, in my opinion. We do. That's why I'm spending time out here. And right now you had the composite trade down towards its 50-day exponential moving average. That line is 43.61. You closed out at 43.71. We'll see how today closes. Look, if you see it close below 43.61, pretty darn good chance of what you're going to see is a move down into the 200-day exponential moving average, which is held as support for quite some time if we pull this back inside of the composite. The last time we actually saw a break of that area, well, the last time we saw a break of that area, I've got to go add more data, because it hasn't been within the last year. But let's go add another 300 days out here and see when that took place. So we're just simply going to go back to the left-hand side of the chart. We're going to look at that blue dotted line out here. When was the last time that the composite broke through there? Well, it was all the way back here in the November 2016 time frame out there. So that's going to be an area really on the daily chart to be watching. I would have to say, now it's quite a ways down, right? It's 41.34. That's another several hundred points down. But that's the level that absolutely needs to be watched inside of the NASDAQ composite. Now, real quickly here, if we switch over and we take a look at what's going on inside the NASDAQ futures out here, we can see that there's the potential for a price relative strength reversal signal out here. But right now, in order for that to occur, you're going to need to see a close above the price level of 38.90. And that's on a 2-hour chart out here. That says coming in at 10 o'clock. If there is a close above 38.90, then you're looking for more of a bounce in place today. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, commodities, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 47, S&P down 5, NASDAQ off 7 out there. And so we were taking a look at that 120-minute chart out there, and I gave you the price objective. And I think the 120-minute chart, the 2-hour chart, good time frame to look at. So anything that's taking place without a close above the level that I gave you, and then I switched over to a different time frame out here, is nothing more than just a little bit of a counter-trend rally. It's a bounce off the lows. It's something that should be expected. Long-time listeners know that when the VIX index has a one-day rate of change of greater than 10% out there, which yesterday was 27.16. When you've got a one-day rate of change in excess of 10%, the chances of a bounce in the upcoming couple of days is like 70 to 80% out there. So, when I took a look at the futures this morning at 5 or so, the Dow futures were off 100 points or what have you. We've seen a bounce. So that bounce at a minimum has been fulfilled at this stage. It doesn't mean that the market can't bounce further from here. We know the levels that you want to pay attention to out there. It just depends on the time frame that you are trading on with regard to how you manage your trades out there. I can tell you on a 30-minute time frame, again, depends on the time frame that you're trading. Inside of the 30-minute chart for the NASDAQ out here, if that's what you were trading on, well, then you'd have a price RMI divergence pattern that was confirmed out here at 7 o'clock this morning. So before the job numbers were out, created that little morning star reversal signal, that very next session coming into 7:30. Hey, no problem. No real confirmation, but you got the confirmation on this bar right here at 8 a.m. Now, it says it's got some real resistance in here. That resistance being overhead, really more so at the 39.32 level, but it's got a clear 38.95 as well out there. And that's what's going on the shorter-term time frame. So that way, we've taken a look, in essence, at the NASDAQ on multiple time frames out there. The reason that we are is because it's really the last holdout here, or very close to the last holdout with regard to the bullish side. And the NASDAQ can buoy the markets higher for even longer out here. So it's going to be the NASDAQ really against at least the Dow and maybe even the S&P 500 and potentially the New York Stock Exchange as well. But I've only got an hour, so we're not going to be able to, in less than an hour now, be able to go into all of that detail out here. But what we do want to do, let's take a look at, you've got gold moving up. It's up $12 out here. It's trading out at $12.95. Now, I won't really know until this weekend after I take a look at the CFTC data and get an idea for what the large commercials are doing as of at least Tuesday, right? Because the information that gets produced is as of Tuesday's close, to understand whether or not they have lightened up their load on their net short positions or if they've ramped them up a little bit further. And why is that important? Well, because it's the big money that's out there, and I like to understand what the big money is doing. But if we take a look at a daily chart here for Goldilocks, you're going to see that downtrend line. That takes you back into October of 2012. Gold right now is trading at $12.94. I would say if Goldilocks can close above $13.06 today, $13.07, that would change my outlook that, you know what, maybe we did see a bottom that formed here yesterday. Because what we've got, there's a 13.5-month cycle. I've shared that with you, and that says that we should be expecting, in my opinion, we should be expecting a bottom sometime between mid-July, mid-August. You know, we give it a little bit of time out there. And what price has actually done here at this stage, it's come back into the breakout session. Breakout session here, nothing more than this wide-ranging bar to the upside that took place on June 19th. Now, look, it didn't come back exactly as you'd like to see it, which would be either to the low of that session or preferably the little doji candle from June 17th. But rarely does the market do exactly what it is that you want. And that's why we use these things as guidelines. And one of those guidelines happens to be that trend line, which gold broke out of in a non-convincing fashion here during the time period of June 25th through June 29th. But on June 30th, okay, there was a little bit of conviction behind that move, and price came down with a full flurry, a full force back on July 14th. Take a look at that wide-ranging bar to the downside, and that trend line held. I'm not so concerned that it broke just slightly underneath it on July 15th. I'm more interested in what happened in that. It's that it really wanted to reject that area. It was like, hey, that's the hot potato, and I don't want to be holding the hot potato out here. And again, today we're seeing a little bit of a trend break. So I think we're getting close. We're getting close. But right now, I have to say, it's really no cigar. There's no conviction that I see here as of yet. You close above 1307. You close above this swing point out here, 1312 on July 29th. That goes a long way to adding to the case that maybe a bottom is inside of Goldilocks. And so that's important for us to be paying attention to. So that's what, you know, if we take a look here at the Dow, let's go look at the Dow. Let's put the long-term chart up on my screen. I got to make one little change here, and then I'll put the Dow up there. So I'll do that as we're going into this break here. We're going to go take a look at the markets. We're going to see how they drop. We'll see whether or not they pop out here. This is Steve Rhodes. This is Tiger Financial News Network. Welcome to the show, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 34 points, trading out of 16,529. S&P off 4. She's traded 1926. NASDAQ Composite off about 5. Traded 46.35. Russell 2000 down 20 cents. Trading at 11.19. NDX 100 off a couple of points. New York Stock Exchange down 22. As I say, watch the NASDAQ. Watch the NASDAQ. Watch the NASDAQ out there, because that's going to be where our biggest clues are coming from. Now, before we went to the breakout here, I had mentioned the Dow, because really it's going to be the fight between the Dow, 30 stocks, and the NASDAQ, several thousand stocks out there. And we'll see who is going to win this battle. Now, I'm taking you back in time out here. Back in the, right now I'm taking you back to 1929. So before the crash out here. I'm not talking about crashes and stuff like that, but just giving you a frame of reference. So we're looking at a Dow stock chart out here, and it was many years ago when I decided in trying to elevate my game and wanting to understand what things might impact the markets, especially future type events that you could know in advance. How could they impact the markets? And so I started doing some research on celestial type charting, which was understanding planetary configurations. And, in today's age of technology, you can take pretty much anything, digitize it, and then go ahead and overlay it on a chart. And that's, in essence, what I did out there. And in my investigation, trying to find some consistency, what I discovered was a pattern that, quite frankly, was more consistent than anything at identifying market tops out there. And that's where you've got this price RMI divergent top. And you can see back here in 1929 is and this is a daily chart, by the way, that we're looking at inside of the Dow. As it was making its high on September 3rd, 1929, such a pattern existed inside the marketplace. In fact, it's a 4-candle configuration that took place between the time period of August 30th September 3rd, September 4th, and then September 5th. It's the same pattern, quite frankly, inside the Dow that took place at the lows in March of 2009 as well out there. And so there was a signal out there. There was absolutely a signal to pay attention to, and it's why we want to go ahead and pay attention to it as well. If I switch over to the monthly chart out here, which I'll do, and I'm not going to go back to 1929. Instead, you're more interested in what's happening today, not what happened back in 1929. And by the way, it's a topping pattern that's been associated with every major market high that I've been able to find. See, it's really consistent. Way more consistent than what's happening in the skies. And by the way, in the month of August, there are some pretty amazing things that are happening in the skies, planetary configuration-wise. But we'll leave that to take. We'll look at that next week, maybe Monday, Tuesday, or what have you. But what you can see out here inside of the Dow Jones is that. Yesterday, we've got that market topping pattern on its monthly chart, and it was a big reversal session. That 300-point damage out there yesterday was way more damage than just being down 300 points. And so back here, I'm showing you the 2007 top out here. It also had a similar type pattern, had the bearish reversal signal that took place back in November of 2007. We have to be careful. We have to watch it. But we also have to we also have to go ahead and put this together and take a look at what's going on in all of the markets. And that's why I say it's really all about the NASDAQ. Watch the NQ, watch the NASDAQ, watch the NASDAQ, watch the NASDAQ. I don't know if I can say it one more time. Watch the NASDAQ, folks, because from there, we're going to really get a good understanding for what the market wants to do out here. Now, right now, you've got the Dow's off 7 points. The S&P is down 90 cents out there. And if you woke up and you saw that the markets were off 100 points and you were short, you were probably licking your chops out there. But then you would have been neglecting the 70 to 80% probability that the market would bounce because of that one-day rate of change, which yesterday was 27% inside of the VIX out there. And you don't want to do that. It all depends on, again, what your trading time frames and styles are. So we've covered gold, we've covered the Dow, we've covered the NASDAQ. I've given you, I think, as good of a overview as to what to be focused on and paying attention. And this way, we're just looking at chart patterns. You see, when I go back and I take a look at a chart and I take a look at chart patterns and candlesticks or what have you, I got no idea what the actual news was around that event. And whereas most people sit around the fire, sit around the television, and try to figure out what happened yesterday, was it Argentina? Was it all the stuff that's going on in Russia? Was it the sanctions? Was it this? Was it that? The reality is it doesn't really matter. It's a matter of what's the chart pattern behavior out there, what's the signals there, because that is the absolute most fundamental thing. And that's why, in my opinion, what you want to do is you would like to understand, patterns out here. You want to understand technical trading. There's no better home for that than here at the Hotel California at TFNN. Now, let's take a look at some things that are moving in the marketplace here. Let's take a look at LinkedIn. That's up about 8%, up $14 and change, trading out at $195 right now. They were out with numbers, producing net income of $63 million versus $44 million. So that's a nice, 20 million, about a 50% increase in their net profit out there for their second quarter. So that looks pre-DG, pretty darn good. Their revenue, $543 million. What was that? It's up about 47%. So let's go take a look at LinkedIn. Let's try to get a feel for where it is going out here. Now, LinkedIn in this morning is gapped up. And the volume behind the move so far, 1.3 million shares. Let's go see what it's potentially trading into. The only real supply line that LinkedIn has out here is the group of traders that thought LinkedIn was a good buy on February 7th. There was 11 million shares that traded hands that day, and that's probably the supply line. That's anywhere between 201 and 211. You see, those folks that thought that it was a good buy at the 211 area, probably if they were still holding on to it when it got to 143, we're thinking, man, that was a lousy move out there. And so those folks, to the extent that they're seeing LinkedIn move up, they're just kind of licking their chops saying, please get up here so I can just get my money back. I don't want to ride the LinkedIn caboose. But is that the right move out there? Is that really what they should be doing when we take a look at LinkedIn? I don't know the answer to that, but let's go take a look at a trend line out here. And if we take a look at the trend line, let's just come off of this trend high from October 21st of 2013, and we take a look at that trend right now today. You're going to see that trend, in essence, right now today, as we speak inside LinkedIn, has been broken. with the gap up out there. So that's a pretty positive sign. If we take a look at A to B equals CD patterns inside of LinkedIn out here, your A point's going to be that low that came in on May 7th. I'm going to use as my B point this little looks like a doji-ish type candle on July 3rd as our markets were making highs in some instances, and July 10th would be our C point. 1-to-1 takes you up, so it's a little bit different pattern that we were looking at earlier because we can redraw our A to B equals CD patterns out here. And you've got LinkedIn gapping up above the 1-to-1. It says that 203.03 is a likely next target for LinkedIn. In fact, I can make the case that if it can clear that little resistance, that little supply line that we're referring to in the 201 to 211 range at 216. But really 216, 211, what's the real difference? So we'll see how LinkedIn handles those areas here. But at this stage, it has at least changed its trend, and that's going back to the trend line from October 21st, 2013. So that's a little bullish sign inside of the market. That's what's going on to the upside. Let's take a look at something that is just getting crushed to the downside out here, and that is web.com. www. Gapping down for a second time period here, so no exhaustion move inside of web.com out here. Gapping down this morning. Let me see what we're there. I'm sure they were out with numbers. No. Web.com announces the acquisition of Scott Company. So in any event, let's just go see what shareholders think about that. Maybe they flooded the market with shares of stock. They did have a second quarter loss of 2 pennies. First, a loss of 20 cents from the prior year. Nonetheless, let's go pay attention to the stock pattern behavior, get a feel for where things are going. Now, in the case of Web.com, big volume to the downside on June 24th, 8.4 million shares out there. So that was your first area of markdown. Big area of markdown. That's after folks rode it up from the bottom down here right around the November 2012 timeframe. Interesting. Our markets made a serious bottom down in November 2012. That's a level of about $13 or so. So $13 rode the elevator all the way up into the March 4th level of about $37. And now you saw some actual markdown. And today you're seeing the second round of markdown inside of Web.com. Where is this headed to? Well, if we take a look at, good question, let's put this on a weekly chart, see if there's any kind of volume bar that maybe sticks out at us. Those volume bars help us to understand where price might gravitate to, and if there's not a volume bar, well, then we'll go take a look at swing points. And in the case of Web.com, I don't see a volume bar of any real significance other than maybe getting back in the time period of April in 2012. So maybe that is really where it's headed to, which is anywhere between the level of 1643. It's trading at about $20 right now, down to a low of about $12.69. That's likely a level where we will see Web.com trade down to. Let's see, what else do we have? Here's an interesting chart for us to take a look at. It is not on my screen right now, but I was looking at it in the pre-market. It just popped up in the pre-market out there. So let's go take a look at it and see where it's maybe trading to. So let me pull this to the downside out here. And, there were a bunch of requests yesterday for me to look at a couple of stocks. I'll go see if I can do that. But Bud, this Bud is for you, Anheuser-Busch. Now, let me put this on a daily chart out here. And we will take a look at the weekly. I want to take a look at the weekly because I didn't get a chance to do that. And Bud here had moved lower yesterday. Volume yesterday, 1.7 million shares. Gapping down here this morning. Volume behind the move, 331,000 shares. What interested me when I poked when I looked at the Bud chart, when it showed up on my screen, and that's why I want to go take a look at the weekly as well. If we take a look at Budweiser, very interesting. The trading session of June 20th, guess what? It's got volume to the upside there. It had 5.1 million shares, so it has a untested high volume high. And on the pullback, and yes, it's been pulling back, and if we take a look at A to B equals CD down patterns, we'll take a look at that first likely projected move out here. Your A point's going to be that high volume high. The B point's going to be the low from July 17th. Right now, the C point is from July 23rd. You can see it's already moved down into the 1 to 1.272 level. Tells me that it wants to still wants lower price. But what's interesting out here is let's try to figure out where it is that Bud has a sign of strength out there. That's what I didn't get a chance to do, and so we're going to do that here live, see if we can find that. And I want to switch over to a weekly chart. See if the weekly chart has a high volume high. Don't know that it does. Now, no reversal signals of any significance, no real volume to the downside out here. So that's a bit of a positive. But let's see what the weekly chart offers us. And if we take a look at the weekly chart, let's take a look at a trend line. So let's get a feel from a trend standpoint what it's doing. Let's come off of the lows back here in 2011. And so here's our, this is a pretty good trend line, I would say. So it hasn't broken its trend line to its trend line to the upside. It has not broken below that level. So that's pretty good. And the biggest volume bar that we can see inside of Bud, well, it's well below that trend line. That happens to be at a price level of 94.49. The high is 86.78. So, it's a stock worth paying attention to. On the weekly basis, is it a high volume high? Not so much. 8.2 million shares out there, at its high. This week it's already done 5.4 million shares. It's not too bad, but it's got a daily bar out there. Let's see if the monthly chart, what's the monthly chart here for Bud have for us? What did it do this past month? Well, that's not so good. You got a little bearish engulfing candle inside of Bud out here. And on the weekly profile, market profile says 90.81. If it busts through the level of about, looks like around 106.80 or so, 106.50, somewhere around there. There's the trend line. You can see that's still intact. If Bud can hold this support level of its monthly market profile, 106.50, 106, let's call it, see if I can get it to click on my screen. Not a real good way to get it to click. It's probably right around 106.50, which is right around where it's trading at right now, 106.79. Maybe we'll find some support there. Anyways, I'll try to keep it on my watch list. Excuse me while I do one of those technical things called taking a swig of water out there. All right, let's go take a look at. So we've covered a few stocks popping and dropping. We've covered the composite, covered the Dow. We took a look at Goldilocks. Let's go take a look at. Let's go take a look at currency pairs. So let's go see what's going on. Let's go see how the month ended here in the Euro-Japanese yen. I didn't get a chance to do that, so that's going to be important. Currency pair. Oh, well, we'll do that. And I also want to take a look at let's also take a look at what's going on inside the DAX, because this is kind of interesting here as we take a look at the DAX. Now, the DAX here, because of I said, they pay attention to the NASDAQ, right? And here inside this is the daily chart, by the way, for the DAX. And if you take a look at its rising price channel, this is coming off the September 27, 2011 area. It's broken through that price channel. Now, it had broken through it, but it didn't really know that it had formed much of a price channel back here in the June of 2012 before it broke back inside there. So it's going to be important to watch what the DAX does out here. In the meantime, let's go take a look at it. It's got still time left in its trading session out here. When we get back from this break, we're going to go take a look at the currency pairs. We're going to go look at the Euro-Japanese yen, get a feel for any message behind its chart pattern out there. Again, our call number is 877-927-6648. Hope you're having a fabulous Friday. Thanks so much for being here. Right now, the Dow is off 17, flat market in the S&P, composite up 6 points. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is down about 9 points right now. S&P's up a couple of points. NASDAQ Composite up 11. And as we go check in on the Euro-Japanese yen, this is the weekly chart that I've got up on my screen here. We can see that it's in a decided small downtrend out here. And so, for the weekly, from a weekly basis right here, it's got a nice little morning star reversal pattern. It is the first bullish pattern on a weekly time frame that we have seen coming off of the low out here since the week ended March 14th out there. And but in order for this to truly get back to bullish, it needs to break that descending trend line out there. Of course, it can maybe it's going to find a bottom and move sideways into this big, strong trend line off of the July 12th area. So that's what's going on inside that currency pair. Because it tracks the U.S. stock market so well, we want to pay attention to that. Now, earlier in the week, we were taking a look at the U.S. dollar Japanese yen, and what we noticed here was a similar pattern to what we saw back during the time period of about November 2013, when we saw price breakthrough, and really was not so much a trend line as it was a channel line, meaning we were using the body of the candle versus the extreme emotion of the candle, meaning the wicks. In this case here, we have a similar one that's across the top of my screen. And if you listen on your radio or your mobile device at TFNN.MBI, don't forget you can get the live stream of the show by going to the home page, upper right-hand side of TFNN, You'll see on the very right-hand side, you'll see a button, 3 little smartphone. Click on that. The show will stream live. And this show here is archived on Channel 9. So what we know about the U.S. dollar, Japanese yen, it has broken an important trend line to the downside, and it did it with some conviction out here. We haven't seen anything. It's a daily chart that we're looking at. It's got an A to B equals CD pattern that it has completed now. The 1-to-1 was 103.04. The actual high came in on July 30th at 103.07. I mean, are you kidding me? That's why you want to make sure that you utilize the power of the A to B, the lightning bolt tool out there, A to B equals CD. Now, over the last couple of sessions, nothing more than a little bit of a timeout. It's more bullish on a daily chart than bearish because you can see that 14-period relative strength indicator. We got up towards the overbought condition, and by working its way sideways, that's more bullish than it is bearish. So we'll pay attention. As far as any other patterns out here that we have to be concerned about, it would probably be the one coming off of this swing point. So let's go measure that. This swing point being the April 4th time period, because maybe this has got a little Gertley sell pattern out there. And as a matter of fact, it pretty much does, because we've completed an A to B equals CD. Let me see if I can find a different color out here. It doesn't look too good. Well, there's the. I guess I can add a color, right? Let me just go add chartreuse. I don't know. Is that pink? Is that chartreuse? I don't know. In any event, so there's your Gertley buy, but no reversal signal here yet inside of the U.S. dollar Japanese yen. So that's what's going on inside that currency pair. To close things out, we started by taking a look at the Dow. We take a mauve. Okay, thank you, Al. So, I think I told you I got thrown out of kindergarten because literally, true story. You just can't beat true stories. But my kindergarten teacher had to have a special meeting with my mom because of the stick men that I was drawing versus what every other kid was doing in class. Hey, it meant that I was really destined for candlestick charting. That's really all that it meant, and she should have known that, but she didn't. Anyways, bless her heart, Mrs. Springer. We were taking a look at the 30-minute chart out here, showing us that price RMI divergent pattern. We're seeing a move right now above the 38.95 level. Watch 39.32 as the next possible area of resistance inside of the NASDAQ, inside of the NQ. Folks, it's going to all be about the NASDAQ as well as the Dow. So it is Fabulous Friday. Stay tuned. The Bull Bear Binary Options, sponsored by Nadex, is up next. Have a great weekend, folks. Look forward to seeing you bright and early Monday morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.